Hello, and welcome to the 35th issue of the Bellringer. And today we're going to be discussing demystifying structured products, identifying investment opportunities with Taylor Ortiz, co-founder and CEO of TPAC Capital, an over-the-counter price provider offering clients financial participation and an active role in the firm, allowing them to make informed decisions on hedging and be rewarded for their collaboration. Taylor started her career in institutional sales trading within the equity markets at Jones Trading, where she specialized in covering hedge funds and mutual funds while sourcing liquidity in challenging trading situations. Following this role, she moved to Macquarie Bank's San Francisco office, where she's based now in California, and she executed timely equity strategies across global markets. Taylor then co-founded Pack Creek Capital, which is a commodity trading advisor, where she led the business development team and specialized in crafting customized hedging solutions for agricultural producers and end users in the US and South America. And then in 2023, she started TPAC Capital. Taylor, welcome.
Thank you so much, Stacey, and it's great to be here. Really appreciate it.
And it's really terrific to have you because this is a topic we haven't really discussed. And let's start off is traditionally, what are structured products and what's their history?
Sure. So, yeah, it's a term that's used all across different asset classes today, but they really first emerged in the 1970s as a way for banks to mainly raise capital and to offer some customized investment solutions as the futures and options market were just starting to come online and develop over time. The first initial structured products were actually in bonds, and those were embedded options. As it grew, it started to kind of get more popular in foreign exchange in the 1980s, and that's where a lot of the structured products for crypto come in from today. And then that was followed into the equities market in the 80s and 90s. We then saw commodities getting involved in the 1990s, and then finally, an area that my firm's very focused on, agricultural commodities, more in the late 1990s. So coming into the 2000s, it was a very strong market, and it really did lead to a lot of additional innovative products, which some we all know from credit default swaps and further other structuring products throughout the 2000s. But then by 2008, due to just continual innovation in the financial community that eventually led to a recession, it kind of became kind of a dirty word for a minute, and the idea of swaps and exotics is another vocabulary that we use. Really started to come into focus with the regulators, and that brought forward a lot of acts that we have to follow today, including the Dodd-Frank Reform Act and various CFTC regulatory requirements.
So when you're defining a structured product,
Mhm.
it'll be interesting. How do you define a structured product? And then how is that different when we're talking about a crypto structured product?
Yeah, great question. So, bottom line is a structured product can be seen as a customized trading strategy, and it's a structure of trades put together. So, block A and block B to come up with either a risk profile the client likes or a desired payout structure the client likes. And they're customized because this hedge fund over here might really need to, we'll put it into crypto terms for today, they might really need to sell Bitcoin quarterly for a certain profit margin. And so they're going to be utilizing crypto options, but they can't just buy a call or buy a put. So they're going to use traders like myself to come up with a really great formula to achieve a certain desired payout effect. Now
Oh, wait,
the
okay, but I just need to
Oh, go
interject
ahead.
a second here. So an individual investor can't just do this.
Great question. No. So structured products are focused for the institutional investor. The
Okay.
reason being is because they require a number of options within them. So typically a structured product, when you hear that word, involves derivatives markets.
Mhm.
And I will offer you, Wendy, one structured product, you, Wendy Capital, say you're an institution. one structured product for desired payout, but behind the scenes, I'm using 5 to 20 different vanilla options or futures to make that happen for you.
Mhm.
So, as you can imagine, it's far more risky for a retail investor to get involved. And the Dodd-Frank Reform Act and other
Right.
requirements don't really allow for retail investors to use them.
Mhm. Got
Another reason, also just to touch on that, is that when you do trade derivatives, and if you are a retail investor that has traded retail puts or options before, just say in, an equities account,
it.
you do know that they require margin.
Mhm.
So the requirements on margin for a structured product are going to be a lot higher since there's so much kind of back editing and background work happening for the market maker to give you that price.
Mhm. So what's now changed in the market that has allowed structured products to be available in the crypto verse?
Right, great question. So, as I mentioned, where the 70s took place with the bond market and we saw
Right?
liquidity come into the market, you can kind
Uh-huh.
of see where I'm going here. And then
Mhm.
equities got more liquid as
Right.
more participants came into the market.
Mhm.
Same thing is happening with crypto. It's really history repeating itself. It's the next market where we're having the retail investors in there. We're having the institutional investors. And I'm not just talking about buying coin, I am talking about the futures markets and the options markets. And now we have an ETF, which is allowing for a greater level of liquidity. So the more that these markets develop and mature, and we can watch how we've done it in other markets, the greater liquidity that's available. And liquidity is completely 100% necessary for structured products. Without liquidity, there's no way we can make these structures happen.
Right. And do you see this? Obviously, now in the United States, there are some challenges in regards to crypto with the regulation, but with the ETF availability now that's changed. Do you see this area growing over the next few years? I know you do, I know you work with the Latin American, South American markets. Is that a
Mhm.
growth area for this structured product area?
Yeah,
I'm fudging on the terminology here.
you're doing perfect.
Uh-huh.
Yes. Absolutely. We'll start with ETF and we'll go into emerging markets.
Sure.
So the ETF is a huge bullish indicator for us and a huge opportunity. So, of course, an ETF is going to be based off of Bitcoin, and there are option chains off of that ETF. So,
Hmm.
even if an American client cannot actually go ahead and trade futures and options, an institutional American client, I should say, they could go ahead and create structured products off of the ETF and the ETF option change to receive that exposure of Bitcoin. So that's one arena that's great. And then as that regulation has obviously come into play, and these markets do get a little bit more regulated over time, and I know that that is a touchy topic, but at least in this arena, options regulation is a good thing for our business. As that comes more into play, that leads to us to be very bullish on seeing far more structures offered and far more liquidity unlocked for all of our clients.
And is this we're talking the US market, or are you talking globally?
Yeah, so in the US market. Now, yeah, going back to your question about Latin America, my
Right. And
client,
I know you're doing more vanilla structured products there. I mean, but is
yeah,
that an area to look at in regards to structured products?
I would say absolutely. Right now, I mean, in every capacity, right now, a lot of our clients have a lot of FX exposure and they're very nervous about foreign currencies against the stronger dollar. So we do see the Bitcoin and cryptocurrencies being one an interesting solution to that, and two, them hedging their portfolio with some other digital assets and some other forms of currency that can help their bottom line. And when I say that, I'm actually kind of really referring to Argentina clients, given the new president and the libertarian focus on their economics.
Mhm.
That's actually an arena I think one should very much pay attention to in the cryptocurrency space.
Now, in regards to if you are an institutional investor and you're looking to get into structured products and over, what are some of the questions you should be asking before you go into this?
Great question. You would be surprised that some of the most advanced trading desks at buy side accounts, hedge funds or any institutional accounts that I speak of, have a really limited knowledge base on what an exotic option is. An exotic option is considered a structured product.
Mhm.
So I would be asking, what kind of what kind of trades are you offering that are exotics, and ask your market maker for educational based material. So start with education, educate yourself, educate yourself, educate yourself. One quick aside as an example is that a lot of people don't understand that sometimes these structures require you to maybe buy or sell twice the quantity you agreed on, because there's no such thing as a free lunch. So you could say, hey, Stacey, you're going to sell Bitcoin at 60 today. You're like, yeah, sounds good. But if Bitcoin goes to 60, you have to sell twice as much at 60. Now, those are details that people kind of lose or they don't want to hear. So educate yourself, no matter how sophisticated of a trader you are. My second thing to always discuss is counterparty risk. I don't
Mhm.
think we have to really emphasize that as much anymore in the crypto space, given the changes that we've seen in the last couple of years.
Mhm.
But even if it's coming from a very reputable firm, find out their balance sheet, find out what they can do, find out what kind of clients they're taking on in this space. Because if they're taking on riskier clients that are more have a higher risk tolerance than you as a more conservative client,
Mhm.
that's something to know.
Mhm. Yes, well, knowledge is power. So,
That's right.
I think that's
Yeah.
really important.
Mhm.
Taylor, this was great. I mean, this is a taste.
Yeah.
And for all of you viewers out there, Taylor will be on our panel on structured products and crypto, which will be held on March 6th in Chicago. And if you have any other questions that, please feel free to reach out and contact us. Taylor, thank you so much. It's been a pleasure.
Thank you so much, Stacey, and really look forward to this conference. Thank you so much again.
You're welcome, and thank you all for listening, and we look forward to seeing you at the next Bell Ringer. Have a great weekend. Bye-bye.